So today we are here for our bi-weekly, bi-monthly lunch and learns. Today is all about financial reporting. I know you guys are so excited to go through how we do audits and what's required of us as childcare operators under the Affordability Grant program in Alberta. And today I'm excited to not be the person who has to talk about this. This is definitely not my strong suit. And we have a really lovely and wonderful guest who is going to be able to answer all of your questions, make sure that you understand what the compliance requirements are, and make sure you're not in trouble or in non-compliance with the ministry under your financial reporting. So with that being said, we'll get started. The goal of these sessions every other week when we do them is really to provide operator to operator information, bring in people that are experts in our field that can support us as childcare operators to make sure that you have as much information as possible. Definitely not here today providing any kind of legal or really financial advice from our side. Just here to support you as a fellow childcare operator. Also to introduce you, these lunch and learns are sponsored by ChildFriendly, and we will talk a little bit about what the services under that program are and how they can support you in the financial reporting and compliance. So with that being said, we can get right in. Today, our guest speaker is Irfan, who's here from RMI, Chartered Accountants. If any of you joined us for our in-person conference in Calgary, he was there as one of our presenters and vendors and really provided a ton of information and lots of support. I know that our childcare industry and ACE especially has kept him very busy over the last few months, I think. And I know you're very busy right now going into tax season. But before I hand it over to you, I'm just going to quickly do a couple of slides about what the financial reporting requirements are, and then I'm going to hand it over to you to give us all the information. So, I mean, I'm sure most of us are aware, if you're in childcare already, that you have certain obligations and transparency that you have to provide as a childcare operator to be able to participate in the Affordability Grant program. Monthly claims are something that we all have to provide, which will soon include all of our children's full information. You are required to keep certain records, certain compliance portions of those records, like attendance hours, parent fees for each child, those sort of things. We did touch on this in one of our previous lunch and learns about the new supplemental fees and how those have to be fully transparent and also, again, reported. So just a little bit of an overview about that. I'm going to hand it over again, but we'll just talk a little bit about the audit documentation and compliance. So again, you want to make sure that you have everything ready to go. It's easy to export your information from whatever your, QuickBooks or whatever software you're using in your center. Make sure you have everything available. You're not scrambling for things when the time comes, and you need to make sure that you're doing your financial reporting on time. And with that, I'm just going to pause here. We will go through the rest of these kind of more specific child-friendly kind of things and different resources that we can provide after Irfan's presentation. So I will hand it over to you and stop sharing my screen.
Perfect. Thanks, Crystal. So I promise you one thing, I'll do my best to make sure I keep everybody awake. I know finances, some people tend to doze off and not want to hear about it, but it is a very important topic. So I'll do my best to keep everybody engaged. With that, I'm just going to share my screen here. And so as Crystal mentioned there, my name's Irfan Molodina. I'm from RMI Chartered Professional Accountants. So we are a firm out of Northeast Calgary here. Very easy to get to if you're in and around the area off of 32nd Avenue and Deerfoot Trail. But we're a full-size firm, so we're staffed now of almost 50 people. We've got a team of managers, bookkeepers, accountants, 4 partners in the firm. So we do full scope of everything from bookkeeping work to review engagements, audit engagements, a lot of the working with a lot of childcare centers in terms of the affordability grant, reporting requirements, and everything on that end there. So with that, hopefully everyone can see my screen here. I'm going to kind of cover over a few different topics. I know we don't have a ton of time, but what I really wanted to take the presentation on was really just identify a few important topics, go into some level of detail, and then make you guys aware of certain things. So if there are additional questions or things like that, Crystal can share my information and our firm's information. So if anything else comes up after the fact, you can always reach out, and we're always here more focused on helping. So if you got quick questions or things like that, no obligation, we're happy to help along the way. So today I'm going to cover a few different things. So I part of it, and I know a big topic or a big part of the presentation, we'll talk about the affordability grant in particular. But really, I wanted to make sure everyone's really aware of like financial reporting requirements, GST implications on childcare centers, because they're very different compared to other businesses. We'll talk about the affordability grant reporting, a little bit on just budgeting and some general financial tips as well, to finish that off on that end. And I did want to leave some time for Q&A. So if questions do come along, you can enter it in chat, or there'll be some time at the end that we can go through any questions anybody might have. Okay. So with that, financial reporting requirements. So any of you who've been running centers for a few years now, you'll be very familiar with this, but couple things to note. So taxes are typically due within 3 months of year end. You have to remember, if you're running a bigger center and you end up having profit above $500,000, your actual taxes are due 2 months after year end, and you do have installment requirements. So just a little tidbit to keep in mind on the bigger centers. But your actual tax filings are due within 6 months of year end. And that's a really important date, because if you don't hit that 6-month deadline, on the 6 month and 1 day, you get hit with an automatic penalty, and that penalty starts at 10% of what you owe. And if you're a repeated failure penalty, like if you're continuously late, they could tax you as an up to 50% of what your tax bill is as an additional penalty. So that 6-month deadline is very key and important to keep an eye out on. And I did mention keep an eye on tax installments. So CRA for a little while was a bit more flexible on installments, but they're really coming down hard on people. So typically, if you owe CRA more than $3,000 a year, you're required to do installment payments, which means you pay off your current year taxes, but you have to start prepaying next year's taxes. And on that end, what happens is if you can do it monthly or quarterly, but if you're late on those, you're going to get hit with installment interest. So even though the tax isn't necessarily due, you can get hit with this extra interest. I tell people it works out to be about 5 or 6% a year if you don't do any installments across the board. So it is an added expense you want to be able to avoid, and a lot of people do forget to do them, so keep a close eye on it. Now, the other big piece on this, I've seen, I put an annual return here. Now, a lot of people get confused between tax returns and annual returns, or they'll say, oh, I thought my accountant just filed this, and they're thinking it's their annual return. But what your annual return is, it's separate from your tax return. It is actually a filing that's required with the Alberta Registry every year. And the best example is, think about your vehicle. You have to register your car every single year. Well, you got to register your business every single year and say that I'm active in nature. If you don't do this after 2.5 years, your business will dissolve. And if it does dissolve, then all of a sudden you're losing a lot of your legal rights on things and your ability to operate. It is not an expensive thing, but the most important why I always like to bring it up is it tends to be forgotten by a lot of people, and then they get a dissolution certificate and it's like, what happened? I've been filing my taxes. What happened? And so it's just something separate to make sure you keep an eye out on. A lot of accounting firms don't offer this as a service as well, so you have to take care of it yourself or go to a lawyer. We are one of the few that do it across the board because we've got somebody in that area that can work with that. So it's just something very important. Keep it in mind and just don't forget it. Otherwise, it can get very expensive to fix the problems afterwards. GST implications. So childcare centers are funny just because they're not allowed to charge GST. And that's what we've started to see from CRA as well, is I know a lot of people say, hey, let me go register for GST when I'm opening a new center so I can try to claim back my GST on the build out, for example. And CRA's argument on this one is saying you're not providing taxable service. So therefore, they're not going to typically allow that rebate to come back. If you try to claim it, it's going to hit an audit, and a lot of times you're going to get a lot of pushback from CRA. The other big piece on this one is what we've seen, which is very surprising, is CRA has gone to the extent of canceling GST numbers as well for childcare centers. So we had this with one client. They basically registered for GST, and CRA, after going through the registration process, they basically came back and just canceled it. So they couldn't even claim anything if they wanted to try on that end. Now, there are a couple things to keep in mind, because if you do provide supplemental items, for example, if you sell toys, clothing, uniforms, prepared meals, any of that kind of stuff, they are taxable in nature. Now, you only need to register if your taxable goods is above $30,000 annually. And if it does get to that level, you register for GST. And then the question comes in, how much can you claim of your ITC credits, which is where you're paying GST out, and that would be done on a percentage basis. So for example, if the supplemental sales made up 5% of your business, we could claim back 5% of your ITC credits. Or alternatively, we can set it up, and we usually take which approach makes the most sense, but you can also set it up where you're just taking the ITC credits on your taxable goods. So for example, if you're selling uniforms, then what would happen is you would charge the GST on the uniforms, and you could claim your credits on the clothing that you're purchasing for the actual uniforms, because you'll be a reseller in that space. So it's just stuff to keep in mind. But where if you do end up having to charge GST, your bookkeeping needs to be really clean, because there could be a lot of complications, and you're at a higher risk of being audited being a childcare center for GST. So you just want to make sure you're ready, because CRA will come back. I tell everyone it's not an if, it's a when they will come back in this industry for GST, and they'll start to ask for all the backup and the proof and everything, and you want to make sure you have it readily available. Otherwise, of course, it can cost you down the road. And I did put a note here, really important, because childcare centers typically are not registered for GST. Just check in with your account for your specific situations if you need to register or not, and then they can assist you on that side. Okay. Everybody's favorite topic these days, the Affordability Grant reporting. So I wanted to kind of cover what is required on this end. And there's three different types of engagements per se, or requests from the government. So if you're getting under $250,000 of annual grant funding, for the Affordability Grant specifically, I should say, they only require an attestation. Now, what that means is anybody can send in their financial reports. The business owner can sign off saying, yes, this is true based on my knowledge, and submit it. Best case scenario, no cost. You could do it yourself. Life is good. If you're between 250 and 500,000, you need to do a review engagement. Now, review engagement, I'm going to go into a little bit of details here, but essentially what we're looking for is what you're providing us, does it make sense? So an accountant in this sense is going to do a lot of tools in terms of inquiry and analysis. And what that means is we're going to take, okay, this is the number of students you have. This is how much funding you should get for this type of student. And when we average it out, does it actually make sense and hit the numbers that you're getting? And if it says, yeah, this is pretty reasonable in nature or pretty plausible, then we say, yeah, we're good to go. Okay. And it's different compared to an audit, which I'll explain in a minute. So on a review engagement, on the client side, I want you to be aware of what the expectation is. And that is you're going to have to invest some time with us, because we're going to be asking a lot of questions. We're going to be doing a lot of inquiry and a lot of analysis. If we come in and we say, okay, in the month of January, you had X number of students, and in the month of February, you had less, but you got more funding. what happened, and our analysis is going to be based off of you being able to provide us a reasonable explanation of changes and things like that. So there is going to be involvement that's going to be required. I don't want people to go on the assumption saying, oh, my accountant's dealing with it, you give it to us, and then you back off. We're typically going to need an investment of anywhere between 1 to 5 hours of time on the client side to make sure that we're getting all the information we need, right? And this is a bit easier, less requirements in terms of we're able to assess, we're not looking for the details as much compared to when we hit an audit engagement, okay? And I know a lot of people in this space are like, oh my God, I can't believe they're giving us this money and they're making us do this work and they're going through all of that. But what to put it high level, they drive me crazy just as much as they drive you guys crazy. But what the government is after at the end of the day is currently the system is everybody self-reporting. They're saying, I had this many students, here's the students I've had, and this is the funding I'm requesting, and then they give you the money. What the government is really after is they're saying when you've got over $500,000 in grant funding, they want somebody to come in and verify that the number of students you're saying you had and the hours that they were in place are actually true and in line. So what will happen from an accountant standpoint that you need to be aware of is we're going to look at your attendance records. We're going to compare that to your grant submissions. We're going to make sure that there's instances that we've seen in the past, for example, where there's a student that dropped out, let's say in February, but they're still on the attendance sheet and it never got replaced. So the submission was happening every single month for that individual. And when we're doing this, what that led to all of a sudden is a big clawback of a bunch of funding. So the more detailed you are in your reporting, the more organized you are, the easier it will be on our end, which means your fee will be lower. So very, very important to set this up properly from the get-go. When we're doing the audits, that's typically what we're looking for is your attendance sheets. We're looking for your submissions and what you've submitted. And the difference between a review and an audit is we need you to provide us all the documentation, but we're not going to be asking as many questions to you because now we're actually looking at the numbers and the details. We're going to do what we call sample testing. So for example, we'll say, okay, you have 100 kids in your center. We're going to review, let's say, 4 months of the year, and we're going to look at 20 of the kids and make sure that what you said, this person was attended, this is how much funding they should have received, this is what you reported, and that's the funding you received. So we still need your time and involvement to make sure you're getting us the documentation. We will still have some general questions and things, but the time that you're going to be involved isn't going to be extensive once you've provided us with all the information. But the biggest thing on this side, and it goes for all the levels, really focus in on the back end. Your guys' systems that you're putting in place for your childcare center, they have to be from day one, you have to be on top of them because right away you're seeing that things that are mistakes can be very detrimental because sometimes you've been carrying forward 2 or 3 students accidentally getting funding on them and now you owe back $40,000-$50,000 in grant funding. And the way the government's working is they're just going to cut your funding for 2 months. So you have to be able to have that money sitting available if there's errors in that space. So really important that you're doing it from the get-go properly to make sure you're organized on that side. Now, the last line there, I put multiple options in reporting periods. And so what's good about this is they are very flexible in how we're structuring this. So for example, I've had some clients where we've done a 15-month for the first year, a 15-month audit where we'll take January to end of March. And now going forward, we'll do it on the government's calendar year end, which is April to March, and do it on an annual basis. But it can save us some work in terms of how much reporting is needed in the first level. When this was first introduced, we did some where, okay, you know what, we can get away with a 3-month attestation and then a 12-month audit instead of doing 2 review engagements. So we'll work with you in that space in terms of making sure that it's the best plan and course of action for you. Rather than saying, hey, you know what, let's just go do a big audit on this. The other big thing you want to be careful on, and sorry, on the reporting option period there, the other thing to keep in mind is you can do it on your fiscal year end you can do it on the government's calendar year end. And then we have some options and flexibilities in terms of saying, okay, for your first year, do we do a 15-month or a shorter period and things like that. The other thing to keep in mind on the reporting side here is depending on oh, sorry, I lost my train of thought, but there was one important one. I'll come back to that one. So at the end of the day, on the grant reporting, biggest takeaways, make sure you understand what level you're under, what the scope of work is that's going to be involved, and really make sure that on the front end, your bookkeeping and everything is very clean. In terms of expectations, like in the other big thing that you need to keep in mind, the affordability grant reporting, what I've seen other firms do is basically do a full-fledged audit or a full-fledged review engagement on the center. Now, that is an option and the government will be happy with that. The only catch is you're probably overspending for it, because this is what we call sometimes like a special review or a special audit, where all the request is for us to really report on the affordability grant. So we can simplify these very quite a bit, to the point where we're just looking at your funding that you've received in this space, and then the allocated expenses, which many times where your rent and your wages, or even sometimes just your wages, covers off your expenses. And so we can simplify that whole piece so it's not costing as much. If you're paying $20,000 for this audit, you're paying way too much. Typically, we're seeing costs around 8 to 10 is kind of the range that we're charging. On the review engagement side, you're closer to 6 to 8. And again, it depends on how organized you are on the front end. The more organized you are, the cheaper that cost is. Okay. So a couple more slides on just general good financial habits at the end of the day. So another big one here we're talking about is budgeting. So when you're launching a new center, for example, or even if it's an existing center, budgeting is a key factor for you. Now you'll see what banks are starting to do, because the space is becoming more competitive, more people are jumping into opening centers, things like that. When you're walking into banks, before they weren't as strict on asking for like a financial projection or things like that. We're starting to see more of that now when banks, when you're trying to go get your funding for your space, they are getting more strict in the space. They are coming back and saying, okay, give me a financial projection for the next 2 or 3 years. And then even on an annual basis, they're asking for an annual review. Now, a lot of times on an annual review, people are like, here's my financial statements by the accountant. See you next year. Do what you got to do. But the thing is, what I tell a lot of my clients is, if your center's performing well, try to maximize the amount of financing you can get. Get a line of credit attached to your business, because when you need the money, they're not going to give it to you. When you don't need the money, they'll throw it at you. And so at the end of the day, if you actually strategize very well, a lot of people say, hey, I got one good center, I want to look at opening another one. Well, when you go look and open another one, they'll look at your total debt. I don't want to give you money for the new center. Well, guess what? If you had already got a line of credit because you're showing strong numbers and asked for annual increases and doing all of that on the one end, you would already have the money available for you then not to have to request for more financing to open up a new center. And so where budgeting comes in that is, a lot of times I was saying, people will just say, okay, my banker asked me for my financial statements, here you go. Well, instead, if you went to the extent of actually saying, here's my financial statements, here's my budget to actual, you can see where my variances are, you can see how much I was out by and how I predicted my numbers so well. Oh, and by the way, I'm opening up a new center and here's my numbers of why I think this is going to be, and look how good I am at budgeting and forecasting, because now all of a sudden they're going to put a lot more emphasis on your new numbers and a lot higher chance of you qualifying for additional financing. So it is a little bit of work, but once you get the system in place, it becomes very structured, very easy for you to do. And not only will it help you in terms of obtaining financing, but it'll also help you keep track of where your money's going and where you should be spending it and how to budget and plan. So very good idea to stay on top of that piece. And you'll see here, best practices when you're doing forecasting, banks will only say, okay, give me your forecasted projections. Internally, I say you always want to have a low, medium, high. Right now, childcare centers, we know there's high demand for them. The affordability grant funding is there, that's helping. But the business at the end of the day is still reliant on the government money. If all of a sudden the rules change, it can throw chaos. And all of a sudden, if you haven't planned what's going to happen if demand goes down all of a sudden, there's a lot more centers opening. What if there's all of a sudden 20% vacancy in every space that nobody's able to fill the space? If the economy takes a hit, people might lose their jobs. You might have parents staying at home now. They don't need the centers. So what will happen if you're only at 80% volume or 80% capacity or 75% capacity? Can you still afford to keep the place open? And this is the stuff that the more you're ahead of it today, when things go wrong, and again, I'll say when, because we know, especially you'll see cycles, especially in Alberta, you want to make sure that you're prepared for worst case scenario. I've put in here Excel is a great tool, but what you're seeing is a lot of financial tools now actually can do it where you've got downloadable templates online, or you can build it into your actual books as well. So QuickBooks, for example, I know many people use QuickBooks online. You can actually go in and put in budgets in that space. And when you do, it'll pull up all your budget to actuals for you, and you can actually start to analyze your reports directly from there. So a lot of cool tools that you can use and a lot of things to make things a lot more efficient on your side. And here's something I always say is aim for the best, but plan for the worst. So yes, you want to make sure your center's successful, and that's the goal, but just plan for what's the worst case scenario. Because if you know you can manage in this scenario where it's the worst case scenario, you know you can be very successful on the other side when things are going well. Just a few more general tips. I've kind of mentioned some of these as we go along, but just to reemphasize, stay on top of your bookkeeping. And it's not only saying, hey, I've reconciled my bank account. When it's childcare centers, the requirement for your bookkeeping is higher than a regular business, because you know you're going to have to deal with the review engagements and the audits on the back end. You need to make sure you're staying on top of everything. Your attendance sheets have to be accurate. You got to have a good process for that. Your submissions need to be accurate when you're requesting the funding. Otherwise, it will come back to bite you where you're going to owe a ton of money back. And of course, you're just your regular bookkeeping for tax and accounting purposes. You've got to stay on top of that. And in this space specifically, you got to be more detailed. So when you're getting revenue, you got to separate your revenue by the different types of revenue. If you're getting the subsidy, record that in a different account. If you're getting your affordability grant funding, record that in a separate account. Record your parent fees in a separate account. Because the more detailed you can be on that end, the easier you're going to make our life, which indirectly will end up saving you a ton of money. Okay. And that's the detailed record keeping, especially for the affordability grant funding. Pay attention to deadlines. Don't just rely on your accountant. We try to be on top of things as much as possible and remind you when deadlines are coming. But at the end of the day, it's the owner of the business's responsibility. If you're missing your deadlines, you're going to pay huge tax penalties. With the new government, that's one of the big things they've said is they're cutting taxes, and the way they want to recover costs is basically more audits, more penalties, and more interest. So you got to pay attention to your deadlines, otherwise it's going to come back to cost you a lot more money. And if you're requiring review or audit engagement services, talk to your accountant in advance. I have a lot of people who just come in and say, okay, I need an audit. Here's my paperwork. Go do your thing. Make sure you're engaging a proper accountant that's actually going through and saying, okay, this is the information I need from you. This is what to expect in the engagement. This is our expectations of you as a client, and this is the stuff I'm going to need, because you don't want to go in thinking that you can just dump a bunch of stuff on the account and go on a long trip, because like I said, there's going to need to be involvement on a review engagement and audit standpoint from the client's end as well. So keep that in mind. So with that, if there's any questions, happy to kind of go through any Q&A.
You guys are welcome just to either put your hand up or turn your microphone on. and ask away. What are some of the biggest like mistakes you're seeing with the financial reporting for the affordability grant? Like when people are coming to you, what's holding them back or getting them in trouble, I guess.
Yeah, the biggest one is the submissions have been done incorrectly. And then from that standpoint, it's missing out on not missing out, I would say probably overclaiming students that might have been there, because a lot of people say, okay, my year starting in September, I take the time and effort to do the ones in September, and then come October, I spend a bit less time on it. November, I spend a little less time on it. But throughout the year, you're going to have changes in your students. And
Yeah.
so what we've seen a couple times is people have accidentally claimed a student, even though they've been gone for an extended period. And by the time we catch this error, it's after the fact. And now once it gets reported to the government, you're getting clawbacks of big dollars. And those clawbacks, like I said, what they're doing is they're coming in and they're just taking the money right away off of your next draw, or
Oh,
just
wow.
stopping your funding until it's repaid. So I know a lot of people are relying on this funding for operational needs. And if all of a sudden it disappears for 2 months, like you can get in trouble really quickly. So,
Yeah, that's huge. That would be a
and the other big one I think is they're starting now to push back on people. I know a lot of people have just, hey, I've come in and I've just signed the report, even though you need a review engagement, and they haven't actually done it. And they're like, yeah, I've got away with it for the last few years. I'm going to keep doing it. We're starting to see that change.
okay.
I've probably a couple months ago, I heard from the first center that they actually stopped funding until they actually got the reporting back into place.
Wow.
So you're starting to see them push back in some ways. And so being more prepared in advance, because this is not something that we can do in a week either. A lot of times people are coming to us. I met with somebody yesterday, and basically the expectation is you're dropping me your stuff today. We're probably not getting it done till July at this point, just because of the time of year. So
Yeah.
if all of a sudden your funding gets cut off, now you're 2 more months without it until we actually can get the work done on top of that.
Yeah. Um, what do you think, like I know from our members with ACE, we have seen quite a few, especially the first year where they were doing full, like you mentioned, the full audits
Mhm.
on their whole business. It was costing people tens, twenties, thousands and thousands of dollars. Um, I know when we spoke at the conference, you really mentioned like that wasn't necessarily the best use of your funds. What
Yes.
do you think the average cost would be for these different levels for people, just to give them an idea?
For sure. So yeah, like an attestation, no cost because you can sign off on it yourself. Best case
Okay.
scenario. Review engagements, you should be somewhere $6,000 to $8,000, and then your audits were kind of 8 to 10
Okay.
when done properly. The little leeway on the higher side, if it's the first time and you're really messy and unorganized, that can push a lot. But you're not going to be paying $20,000 or $30,000 for a full audit on the company. There, if that's the case, the accountant doesn't understand the requirement and they're going overboard. So just be careful in that space for sure.
Okay. That's great because I know that was the number that I kept always hearing was about $30,000, which
Yeah,
significant for us. Um,
absolutely.
it's been, interesting few years, and like you say, I noticed with other things, the ministry starting to catch up almost
Mhm.
and starting to kind of enforce things that maybe they weren't a couple of years ago. So yeah,
For
it's really
sure.
important to stay on top of everything. Is there any other questions before anybody
I
else
see
have anything?
Jelena put one in the chat here.
Okay.
So how can we assess whether the accountant we want to engage understands this industry and what's required? Whether they're aware of a special audit is required versus full review engagement, what else to ask? The way I always do it is say you should come in and talk to them. A, do they have other clients in the space? First, can they even do an audit? Most small practitioners don't do audits. And then you're stuck kind of going to the bigger guys, and the bigger guys will charge you an arm and a leg. So you want to find the ones that can. And then basically the question to ask them is, okay, if I'm going to do an audit, what's going to be involved and what's the cost going to be? If they don't understand the industry, they're going to give you a quote of $20,000-$30,000. And that means they don't have a lot of daycare clients, or they're not going to be the right fit right away. If they come in and they should be the ones explaining, this is what I'm going to do, this is what the requirements are. And if that's the case, then you've got a good fit, because at the end of the day, what you want to hear is say, yeah, we're going to do something called it's called a CAS 805 audit or review, or a special review or audit. And all we're looking at is your affordability grant money, and we're going to look at some very specific expenses. Most are going wages, rent. Some might say, okay, I'm going to look at some of the office supplies and the other categories, but really your wages and rent will cover it off. So that's what we do. And then the revenue piece. And that you can see is a lot less work than doing a full scope audit on that side. And is it possible to share a recording of this meeting? And that's a question for you, Crystal.
Yep, we'll
okay
upload it after the meeting. It'll be up in the next day or so. I actually had a question for you. Oh, when you were talking, I know this is something in the beginning we used to always have people ask in our meetings. When you talk about keeping things in separate accounts, like you were talking about, subsidy, parent fees, affordability grant, all being kind of in different accounts. You don't need a separate bank account for those. You could use like QuickBooks or something. Is that right?
Correct.
Like,
yeah, exactly. You don't need to have separate bank accounts for it. But on your bookkeeping is where you want to track it separately. So it's really important. A lot of people, we get some businesses, and not childcare centers, of course, but we get other businesses that will say, you know what, I've just run my bank account throughout the year. Here's my bookkeeping at the end of the year. You guys figure it out and do it all at once. In these centers, you can't do that, because at the end of the day, what happens is you need to make sure everything is detailed. Now, if you give everything to an accountant or a bookkeeper at the end of the year, they're going to come back and be like, 12 months ago, you got this money. What was it for? You got this. What was it for? And unfortunately, the records won't line up, and there's going to be issues. So you just need to make sure you've got somebody engaged to do it on a regular monthly basis. And we do it for some of our centers that we do. And what we've managed to do is separate our departments as well. And so this way we can actually do the bookkeeping piece while still doing the accounting on that end, or sorry, the audit on that end, because we got to watch independence. And so what we do is we'll lend out a staff, for example, and say, okay, for 1 day a week or 1 day a month or whatever the case is, you can take one of our staff. They still have to report to the business owner, not to us, because we have to maintain our independence when we're doing the work on the back end of the reviews and the audits.
That's great. And I know, like, for my center, we use QuickBooks. It's really easy to just separate out the accounts and
absolutely.
Yeah.
QuickBooks is a great software because it's simple to learn. There's lots of resources available. So for sure, it's a really good one.
Does anybody else, any questions in the chat? Anything that you want to make sure that we cover before we wrap up for today?
And afterwards, if anybody has any questions or things like that, Crystal, you can share my information, you can send over an email or things like that, and happy to
for sure
answer questions.
Yeah, I can put it on here too, just so that everybody has it.
Could I ask a question? Could you guys hear me?
Yep. Yeah, we can hear you.
I want to know if you want to go back in QuickBooks, how could you do that and then go back and digitize stuff? Is there anybody doing any kind of courses on QuickBooks for people that haven't used QuickBooks before?
Absolutely. There's lots of resources on QuickBooks. Some people will do class training. We will offer one-on-one training for clients that want to learn the program. So we have a couple bookkeeping managers that are pretty well versed in the software, and they'll sit down with you. It's such an easy software that usually I'd say people learn, like when we do it one-on-one, it's a couple hours, and you get a good overview of what needs to be done, and then they're there to answer questions when you get stuck on certain things as well. And once you get that all set up properly, they can help you get it set up properly. and then you can run with it and do what you need to do. What's nice about it, it does have a lot of automation, so you can link it directly to your bank account, which will save you a lot of work and things like that on that side as well. So
Okay, thank you. Wonderful.
no problem.
Great. Yeah, so I mean, we can just touch a little bit on using some of the software. Like you mentioned, QuickBooks is really easy, and I know it's super easy to link your bank accounts, credit cards too, just so that it's always kind of, you're never falling behind. We can talk too about just making sure that your claims, like you mentioned with your attendance, such an important thing. I know I talked to an operator in the last few weeks that had over $50,000 was being clawed back because they had misreported on certain children throughout the year. And like you said, they will just stop your funding until they reclaim that money. So definitely really important to make sure, however you're doing attendance, whether you're using something like ChildFriendly or another software, that you have it accurately reported. Wayne is here from ChildFriendly to answer any questions if people want to ask about the software and what it can do to make sure that you're staying compliant. You can track and reconcile your affordability grant program subsidies. I know we're on our way out with those, but the affordability grant program can be tracked through the software as well, and making sure again that your claims are accurate and all balanced and reconciled at the end of the month. Wayne, is there anything that you wanted to add before we wrapped up about like the financial reporting friendly?
Yeah. For sure. Yeah, maybe just to take a bit on what Irfan was saying. When it comes to being easy to export stuff out of our platform, pretty much almost everything on our platform, even though we fully digitize all operations for the daycares, we do make it easy so that you can export everything out in Excel, CSV, so that it's easy for you to, do any sort of analysis, any sort of reporting you require. When it comes to the attendance records, we might be one of the only platforms that allows you to track your staff by their different tasks, so which is very helpful for your wage top-up funding. And we also do have sync to QuickBooks as well, as everyone's kind of mentioning, breaking out your different, revenues, claims. When we do our sync to QuickBooks, any line items that you have, you can definitely allocate them to the specific products and services in QuickBooks. And if you do need any help with QuickBooks as well, I can also be a contact if you guys just need any sort of support with regard to using QuickBooks as well. I'd be fine to help out with that. But yeah, no, thank you so much to Irfan and Crystal for the presentation today. But yes, if you are, we will be sending out an email with a thank you email with everyone's contacts. So if you do want to reach out to Crystal or Fan or myself, you'll have that after this meeting. Thank you.
Perfect. Yeah. So we'll let you guys get back to your day. Hopefully you got to eat some lunch with us while we were discussing all of this exciting stuff around finance and audits and your reporting requirements. Definitely encourage you to reach out to Irfan and his team and make sure that you are, not spending $30,000 on an audit if you absolutely don't need to, and that whatever you're sending through to the government is compliant, so that you don't end up with a situation where you're getting your claims frozen or your funding stopped. He's local to Calgary, definitely knows childcare. I think childcare operators are flooding your office.
Yes.
So
these days they are, but
which is great. And I mean, you want someone who knows the industry too, right?
absolutely.
Yeah, thank you. Thanks for your time today. I appreciate you doing this for us. Keep in touch, and we will see you guys in 2 weeks for our next Lunch and Learn. So thanks, Irfan. Have a great week.
No worries.
Thank
Thank you.
Bye, Wayne. Thank you.
Bye.
Bye-bye.